day, traders. Richard Jeddah, a quick Ichimoku cloud chart and point and figure chart review of Tesla. We're back in bearish territory since price action is below the cloud. Tesla lost support at the bottom end of the cloud here, 231. It then activated the downside targets of 229 and 220, and then we got there. Now it's critical for support to come back in at this zone. It's the bottom end of the cloud chart shadow, for example. So it was interesting to see if Tesla is going to get a rebound from this potential support zone or sell off further and then hit the standard line cloud chart shadow of 210 there. So that's the critical factor there. Looking at on a weekly Ichimoku cloud, we can see we just make this a little bit bigger. You can see Tesla's fighting for support here at the top in the cloud. There's downside risk to this significant cloud chart support zone. That's kind of a line in the sand for Tesla to, if the stock drops below this one, then it goes into bearish territory on the weekly. But so far the weekly is still bullish. Price action is above the cloud, the bottom end of the cloud at least, and is now fighting for support in this cloud chart zone. So this zone between the 220, 219 and 208 is a significant support zone on the weekly Ichimoku cloud. And you can see the weakness after ran into trouble there, reversed lower, sold off, and then sliced through the top end cloud chart support zone. Just looking at it on a 4-hour Ichimoku cloud chart basis, after the sell signal up here, when it hit resistance, Tesla sold off, failed to find support there. Support then turned into resistance, then sold off, failed to find support at the bottom end of the 4-hourly cloud, and now it's sliced through, entered bearish territory, and then activated the downside targets of 229, 223 and then 219. So it hit those downside targets. Now the question is, will support come back in at this zone? If we just zoom a bit further out, we can see the 212 is the next downside risk target on the 4-hour Ichimoku cloud. So there's potential downside risk to 212 if support does not come in at this 219, this bottom end of the cloud chart zone there. Now, interestingly enough, if we look at this high and this low, we could see a 50% retracement of that move. So if support comes back in here, we most likely rally back up. And then there's the potential for it to get back up to the bottom end of the cloud. These zone levels there, that's the upside, potential upside price targets if support comes in at this old cloud chart support zone of 219, 220 and 212. So that's the analysis on the 4-hour, but just let's pop back to the daily. You can see fighting for support there at this bottom end cloud chart support zone. It's critical for the index to find support back at this level. If support fails, then the next downside target is 212. Next up is the point and figure chart analysis. If we look at Tesla from a point and figure chart perspective, I've got the 2x3, $2.2 box size, $3 reversal. Point and figure chart up here, it hit the 228 downside target, also hit the 222 downside target, and is now in the process of reversing to the upside. It'll be interesting to see if we get this rebound. This can be a technical swing trade retracement back up to the 240 upside target then in this case, but absolutely critical day ahead for Tesla to rebound from these old cloud chart support levels. And we can see the point and figure chart is trying desperately to print an X there to signal that we're reversing higher, but it hit the 228 and 222 downside target, and 202 is the next one if support fails at this level, and 192 the next level after that. But Tesla desperately needs to make a point and figure chart reversal to the upside at this point in time at these critical cloud chart support levels for us to go back up. So in essence, we need to see a $6 reversal to the upside to signal the end of the downtrend and to print an X there on a point and figure chart basis to highlight that we're going back up. Now note that we tend to get point and figure chart reversals soon after hitting fairly sizable point and figure chart downside targets, but we took out the 228 and 222, and this comes soon after the sell signal up here at 260 on a point and figure chart basis. But right now I'm looking for a $6 move to the upside to print an X there on a point and figure chart basis, and that will be a nice entry point for a nice swing trade to do a technical retracement, a Fibonacci retracement of this sell-off. The other thing to remember, Tesla's got a bit of a valuation problem. The stock is very, very expensive. If you rank it on a PE basis, it ranks in the bottom 10% on a global percentile ranking based on price earnings ratio. The 12 months forward PE is 61 times versus the median of 7.8. The price to cash flow also ranks in the bottom 20% of the market, and its next 12 months price to cash flow ratio is 41 times. So there is quite lofty expectations in the Tesla valuation. Now, in terms of the coming earnings quarter for the full year December, the predicted surprise by analyst expectation, where we track the most accurate analyst estimates, is for a earnings miss of 0.23% and a revenue miss coming in below expectations of 0.11%. So there is a possibility for a slight negative downside earnings surprise in Tesla's up and coming earnings figures later this month. Just back to the Ichimoku Cloud, critical for Tesla to rebound from this 219-220 support zone. We're looking for volume to come back in here, and that can mean a swing trade to the upside, back down to the bottom of the cloud of 231. If support fails, then we're going down to 212 and 208. Until next time, happy cloud chart trading. Bye for now.